Hello everybody, this is Stefan Dote from TradingCandles.com. We saw some interesting things in the market today. We thought we'd bring out to your attention here in a quick, maybe 10-minute video. First off, the SPX, or the S&P 500, broke out today, making all-time highs, and we have some technical price targets listed there. We will pull up a chart later and point those out directly on the chart. But it was a good breakout, and with the low volatility, we could see it keep creeping up here. And the next thing was a good durable goods report this morning, which actually made the market gap up at the open. The concern for me was most of the spending on the durable goods was from the government, not from the retail consumer, although the government is probably one of the largest consumers, pretty much many things in this country. And a large part of the spending was in transportation and air defense sectors. We spoke about this yesterday, and those charts told us the story before those reports came out, so it's no surprise that durable goods report was good. And if you want to look at it in sort of an ironic way, if you had invested in these stocks that the government has been purchasing, you could take your profits and pay your taxes, and maybe get a little discount there from the government on your taxes. We could probably all use that. Consumer confidence report came out today. It was also positive. I did a little research today, and what makes it a little bit interesting is that it's based on a polling of only 3,000 households. And later this week, the Consumer Sentiment Report comes out, and that's based on only 500 households. So it doesn't seem like a really large portion of our population or cross-section, but it is what it is, and it does move the market. But all the information we just discussed definitely supports near-term strength in the market. Like I say, nothing may be shooting up like a rocket, but it definitely points to a good solid base, if not a good solid up move. Here's the actual chart of the consumer confidence, and you can see here in the last 2 months we've been up quite a bit since January and February, which can be pretty slow months typically anyway. But this line here is actually the confidence of the consumer. So the confidence of the consumer has been rising since 2011. However, as the confidence has been rising, these bars here are actually the retail sales themselves. So we're saying we're feeling better. Our 3,000 households are saying, hey, yeah, we're feeling more confident. But for some reason, we're not really buying as much as we were 3 years ago. So just an interesting little tidbit on that end. So I think that was it for the little PowerPoint slide. So we'll just pull up a couple of charts here and see if we can't make some heads or tails of a few things. This is just a nice chart here I had up. I was looking at this is from a very long time ago. But we'll just start with the SPX itself. And we will pull up a one, I like to pull up the 9-month charts, easier to read. And as you can see here, we have this nice uptrend. And we have the breakout from this point right here. And draw that in. So we get a nice little breakout. I'd say I'd call it right about that point there. And we could even turn that blue. And just to give some credit to TD Ameritrade and Thinkorswim, I use their charts pretty much exclusively. Their platform for option trading and charting is really superb. So I'm not a salesman for them, but that's what we're looking at here. And so anyway, we have our breakout here, and I have 3 technical measuring targets. shorter term here, we have 1928. And then the next target we should hit is 1947, and then on up to 1965. So I'll leave these on the chart. We'll see how close we come to hitting those. It doesn't mean the market turns around there, but it's a good thing to say, hey, the market might take a pause here, and you don't get so panicked, when you hit those numbers and you see the market just stall for a minute. And with the studies up, you can see that the moving averages, the fast moving averages are above the slow moving averages, which is good. I'm going to go down to a 2 moving average. So we have a 125-day moving average and a 50-day moving average. So those two are above each other. We have a great bullish uptrend going on. One of the stocks we're holding had a breakout today, MU Micron Technology. It doesn't have a huge technical price target, but it really has a beautiful chart. We had a little slowdown in this area, a little earnings pop. But I keep adding to this, and I'm just watching it, and I haven't actually even looked at this, but we'll take a look at this on a 2-year. And it was a little choppy in here, but overall, once we had our breakout, we have our green arrow, our cross of our DMI, our cross of our moving average. We probably would have got in somewhere in here and broke above these highs on these candles over here. Again, this is a 2-year chart. Each of these candles is 1 week, and it's basically been on a nice uptrend and continues to head up that way. Looks like I put a fundamental target on this of 48 back in March. So back in March, we were trading in around 22. Or let's see exactly here. We were trading at, closed at $24, $23.96. So we're at 28. So it's up 4 points, about 15%. And we could hit that target there. Stock I'm looking at for actually just a trade is Fiserv, and quite honestly, I like the chart. I'm not even really sure what this company does, to be honest with you, but you will never see a more beautiful chart than that. And you can see on this 2-year chart where we have the breakout and then a pullback, and it could definitely run up from here. Now, for a little candle lesson, the halfway point of a very large candle is a strong support area. And when you have a breakout and it pulls back, it cannot break below the halfway point of that candle. That is a very strong sign. Institutional buyers were in there, and they were not buying expecting it to go back down. And what you have to remember is there's a big difference between selling and not buying. So institutions will run prices up and stop buying, and either short-term profit takers will sell, or some weak hands will sell, and the institutions will let it come back down to them, and then they'll start purchasing it again. And so again, there's a big difference between selling and just not buying. And I'm going to go ahead and pull this up on my 9-month chart I like to look at for general trading. Now you can see the 2-year chart takes quite a bit of the noise of a chart. And even if you take the studies off, boy, does it look a lot different there. You can really see the support levels. But we like our studies. They give us some valuable information. But again, with this system, it's easy to take them on and off. So here's our breakout. Here's our large candle. We broke that support. Never broke really past that halfway point. Now it's starting to push up. And the MACD here is starting to push up also. So, there could be a short-term run easily back up to the high here, which is 62. It doesn't seem like much, but if you're an actual sort of swing trader, you could come in here and pick up a couple points and, have a good day's payoff of that. And so we're looking at that ourselves for an entry and see how that goes. A similar trade that we passed up on, and sometimes you just get caught, like the deer in the headlights staring out the window, was Priceline. When it came down here in earnings to this really strong support level and started to make this bounce, we really wanted to get into it. And for whatever reasons, we had our reservations and just decided to let it go. And as you can see today, it really popped and on some above average volume. That blue line there is a 30-day average of the volume, so you can see it's well above that. So that would have been a nice trade, but we, sometimes you just let things go, and that's the way it is. And one more to look at, which I think can be interesting, is WDC, Western Digital. They make hard drives, storage for computers, networking, that type of thing. And now this stock too itself had a really large pullback, and you can see this real double top in here. Again, we're getting a little technical, but you can see the high with a lower high and high with a lower high. So we're getting a sign of a double top. We break the moving average. Right here is, this kind of a sign to get out, but on our 2-year chart, it never broke down, so we held on to it, and it's turned around and had a nice pop today. If you look at the other stock in the sector that's really going gangbusters, would be SanDisk. And that thing is just going and going and going and going. As long as this has this kind of strength, and the NASDAQ can remain strong, and the semiconductors can remain strong, as we see here, Western Digital is probably going to get pulled along up the rope with it. And it doesn't have bad fundamentals. So that's actually not a bad stock to look at getting into. It's not at, all-time highs, but it's in the range there. It could make a move. So that was pretty good. And back to the durable goods discussion, some of the stocks we looked at that, did well from government was transportation. And we'll see, I haven't even looked at this chart yet today. Is the transportation index. And, all-time highs there. And then we, own some General Dynamics, and it's about to make a little breakout here. And we could have a couple different targets on there, but right now I got a 121, 122 longer-term price target. And I just would like to check Disney. I didn't have the time to look at the market much today, so I'd like to see if Disney did its breakout we talked about yesterday. So there's data load here. So it's trying, and it's nibbling, it's on average volume. I wouldn't consider that a breakout. I would hang on a little bit. I prefer to see a candle open and close above the resistance line, or at least a big candle that is more than halfway above that resistance line. And I would really like to see some volume, something like back here where it breaks above, and you can see the buying happening in here with a little bit of volume blast. But this is still a good thing to watch, and even if it were to pull back down, we can extend out this support line here. We'll bring this up to here. that back in. If it pulls back down here, maybe okay to play this channel. Eventually, I think it's going to break out, and the longer it stays in this channel, the more momentum it is going to have on that outswing. So anyway, I think that's it for today. There's some good trading ideas in there, a little bit of interesting news on the economy. We have some other news coming out this week, so there might be some good trading this week. Watch your charts and follow your rules, make some money, and have a good day. We appreciate it very much that you can.